Hey everyone, welcome back to Corporate Decoder, the place where we uncover the real stories hidden within company filings. And today we're diving into a really interesting one that hints at a pretty big shift for a well-known tech player. Get ready because we're about to break down Masimo Corporation's latest 8K filing, which signals a major change is on the horizon. Make sure you are subscribed to Corporate Decoder and swing by our Discord community, linked in the description to join the conversation. So what is this 8K all about? Well, think of it as a current report filed with the US Securities and Exchange Commission, or SEC, to let everyone know about significant events that happen with publicly traded companies between their regular financial reports. Today's filing is pretty significant. The big news here is that Masimo Corporation has entered into a material definitive agreement, and that is just a fancy way of saying they've signed a really important contract. Specifically, they've agreed to be acquired by Danaher Corporation. Now, this isn't just a small deal, this is a merger agreement. Masimo, the company we're looking at, will merge with a subsidiary of Danaher called Mobius Merger Sub Inc. Once the merger is complete, Masimo will become a wholly owned subsidiary of Danaher. So what does this mean for Masimo's shareholders? Well, the agreement states that each share of Masimo's common stock will be converted into cash, and the price is set at $180 per S-share. This is a pretty significant premium if you've been holding on to Masimo stock. The deal also specifies how different types of stock awards will be handled. For stock options, whether they are vested or unvested, they will be cancelled and converted into the right to receive the difference between the merger price of $180 and the exercise price of the option. For restricted stock units, known as RSUs, other than those held by non-employee directors, they will be assumed by Danaher and converted into Danaher's restricted stock units. These will have what is called a double trigger acceleration, meaning they'll only become fully realized under certain conditions, likely related to job changes after the merger. Now, for the restricted stock units held by non-employee directors, these will be cancelled and simply converted into the $180 cash payment per S-share. Performance stock units, or CS, which are tied to how well the company or its executives perform, will also be cancelled and converted into cash at the $180 per S-share price based on target performance levels. Of course, big deals like this don't just happen overnight. The consummation of this merger is subject to several conditions. One of the most important is the adoption of the merger agreement by Masimo's stockholders. They'll need to vote and approve this deal. There are also antitrust approvals needed from various government bodies to ensure this merger doesn't create too much market concentration. And of course, there are conditions around the absence of any legal issues that could stop the deal, and that Masimo hasn't experienced any material adverse effects. Adding another layer to this is a voting and support agreement. This agreement is with Danaher, Mobius Merger Sub, and Politan Capital Management LP, which is a significant shareholder. Under this agreement, Politan has committed to vote all of its shares in favor of approving the merger agreement and the merger itself. This is important because it signals strong support from a key stakeholder, making the stockholder vote more likely to pass. This agreement also ensures Politan will vote against any competing offers or actions that might delay or disrupt the merger. On the 17th of February, the day after this agreement was signed, Masimo put